Let's talk to Dr. Ifeoma Nwokolo. She's an Assistant Vice President, Economic Research, Financial Derivatives Company. Great to have you on the show. Good morning.
Thank you for having me.
Fantastic. So we're seeing some price movement there with global commodities, and we're seeing wheat just saw its biggest drop in weeks. What's really behind this price fall?
Yeah, recently we've seen a drop in the price of wheat, and this is the largest decline in 3 weeks. We've seen that the average price of wheat right today is about $5 per bushel, and this is basically because we're in harvest season. So there is ample supply in the global markets. You see countries like Canada, Australia, Argentina, US. These are large producers of wheat, and this is the harvest season. That is why we are seeing the market flooded at this time. And this is a plus for Nigeria because wheat is an imported commodity for Nigeria. And in short time from now, we'll see the prices of commodities that are wheat-based begin to decline. Commodities like noodles and pasta and the likes. But we are not going to see price shift immediately because there's always a lag between when there's a global decline in price and when it filters into our domestic commodities, because there is, when traders import these commodities, it takes 3 to 4 months before it gets to Nigeria. So that's the lag we are likely going to see. And also we are seeing that aside the imports favoring us, we are seeing that our exports too, prices of our export commodities are also rising. You take, for instance, the price of Brent, yes, increase, and we see the price of also cocoa has been on the increase. This is because there is a kind of weather condition in West African countries where cocoa is produced. And if I'm not mistaken, by this time last year, cocoa went up to almost $9,000 per barrel. I think we are tilting towards that. That's from the trend of what we are seeing, and this is a plus for Nigeria. Also, the price of Brent slipped this morning. Yesterday, there was an increase in price of Brent, but this morning it slipped because of some geopolitical tensions and because there's summer demand has begun to decline because very soon summer will be over. So we see that all this is featuring into the Naira. Naira has been quite stable, and yesterday traded flat at 15.43, and is a plus for us because we have a lot of buffer. All of these foreign earnings are buffers that is keeping the Naira stable at this point. Then one can be asking, is this actually stable? Is this actually sustainable? Well, projecting what the exchange rate will be is just like trying to catch a falling knife. Even though EIU has projected that the Naira will remain stable throughout 2025. And what we are seeing is there going to be a kind of pressure. Yes, there's going to be pressure because very soon international students will be paying school fees. There will be pressure in the market, and also traders also will demand for dollar to import for commodities for Christmas. So this is the pressure, but I think because of the influx of inflows that we have now, I think there's enough buffer. It will not really have any effect, but once there's a significant shift in interest rates, I think FPI is going to reverse. Of course, FPI we know is hot money. So it comes hot and it goes out very hot. So that is the only, but from the look of things, I don't think that we are going to have any significant decline in interest rates. If we are going to see any shift in interest rates, it would be maybe 25 basis points. That's only if our domestic imperative align with the CBN focus. Yeah.
All right. So, definitely we're seeing wheat down, cocoa rising, Brent down this morning after rising, yesterday. So I guess, the commodities are not looking so bad because these are part of our exports. at this time. But let's look at the liquidity in the money market. We've seen a surge there with repayments and, fact disbursements. What does that mean for, borrowing costs? And definitely we know borrowings also affects the Naira.
Yes, when we talk about liquidity, we saw that there was excess liquidity in the market. And once there's excess liquidity in the market, you know what it means. It simply means that there is danger. Yes, even though it's going to bring down borrowing costs. But the problem is once this liquidity gets into the system, it causes inflationary pressure. And what should be done is to mop up the liquidity, is to either increase interest rates, of course, either the treasury bills are increased, or the CBN, of course, interest rates must be increased, or there's sales of OMO to mop up this liquidity. But if otherwise, this money can go into the system in two ways. It's either it's going to the system through the forex, whereby you see pressure in the forex market. And don't forget that this excess liquidity is due to FAC disbursement of about 2 trillion, yes, and also repayment of OMO. Yes, this brought about an increase of over 200% in liquidity that we have. So there is need for a mop-up of this liquidity. If it goes into the FX market, it means it will lead to demand spike. Of course, the trend has shown that once FAC payments is disbursed, there's always a demand spike in the forex market. Also, another way it can filter into the system is if it goes into the stock market. And once it goes to the stock market, we have what we call asset price inflation. And this can lead to bubbles in future. So there is need for mop-up. And once there's mop-up, I think we are good to go. If otherwise, there may be renewed inflation. Let me put it that way. There will be renewed inflation.
And definitely consumers are looking for a break at this point. We don't need any more, inflation. But we're seeing food prices like, tomatoes, pepper, and beans, they've been falling, as the harvest season, comes in. So I guess that's kind of a buffer, at this period. But does it continue, for the few that's going into September at this point?
Yeah, September is still part of harvest season. August, September, I think we'll see prices come down. We have seen price of tomato taper to 65,000 naira. 2 days ago, the prices was high, but today we saw it taper to 65,000 from 70,000. We saw pepper also decline to 70,000. We saw beans decline as well. So prices are declining, yes. We're in harvest season, as I said, like I said yesterday, and this will continue. But of course, once we enter the Ember month, it's a different story altogether. Yes, it's a different story, but people are beginning to shop for Christmas now. Yes, people can shop their tomatoes, blend it, and freeze it for Christmas. People are already purchasing rice for Christmas because once is Ember month approaching Christmas season, very close to Christmas, see the prices of commodities will increase because of increase in demand.
Yes, but hopefully we don't all go shopping for Christmas now. Won't that spike up prices? Maybe I should go do my shopping now for Christmas, right?
This is the best time to shop for Christmas because we are in harvest season, so prices are down. If you have where you can preserve it, it's the best time to shop for Christmas. Even clothing too. This is the best time to do that, to avoid rush period. Because once there is rush, whether there is increase in price, of course, this part of the world, once there is rush, whether there is increase in price or not, traders will want to, because demand is high. So they definitely push up these prices because of festive.
All right, watch me go shopping for Christmas now. Thank you so much, Dr. Foma Wokolo, Assistant Vice President, Economic Research, Financial Derivatives Company. Thank you for coming on today.
Thank you for having me, Ladi.